Welcome to this week's Finance Talk. Today we're talking about the tax benefits available for investing in property if you're going to turn it into a rental investment. So what are the tax benefits? Much of the country recently has experienced a weakening in the local property market. A report that was commissioned by Hamptons shows mortgage rates have fallen to a record low. If that is the case in your local area, now is an excellent time to invest in property and make that decision. Investing in property provides exceptional tax benefits as well, which can be a great deal when handled correctly. My advice is always to get a good accountant to give you the proper tax advice on how you should set up your business and what tax benefits you will get by investing in property. In this week's blog, Savvy Women Group content will take you through the potential tax deductions within the field. So at the end, you have a clear understanding on what to look for and what is included. So what can be classed as deductible? Many rental property owners find that they can deduct many of their expenses incurred in the maintenance of the property, such as repairs, utilities, insurance, letting agents' fees, or property management. Now, if you're managing your own property, this can also be tax deductible. But again, always reach out to your accountant to get the best advice on what you can save on and in what areas you can get deductions from. Depreciation deductions as well. Depreciation deductions can be frequently be written off. In fact, depreciation is frequently one of the best tools available to owners of rental investments. It provides you with the opportunity to essentially write off large expenses associated with owning and operating a rental portfolio. Many of these depreciations occur over a period of time. For residential, it's normally around 27.5 years, and commercial property depreciation covers over a 39-year period. This means that if you paid 150 for a rental property, less the value of the land, the annual depreciation will be approximately £5,000. Upgrading your property. You can also frequently include property improvements in your cost base and depreciate them over the time as well. Repairs typically can be deducted during the year in which they occur. Not sure whether something's classified as an improvement or repair? Keep in mind that the improvements will be added to the property's value and prolonged the life of the property. While a repair is intended to keep the property in good condition, also remember landlords are not able to assign a value to their own labor and then deduct it as a cost. So if I done repairs on my own property, I can't make that as my labor. I can, however, associate it with a builder coming into my property and associate it that way. So travel. Many landlords also have to deduct the cost of travel, whether it is driving or flying. This may be especially handy if you are a landlord who manages their own properties and you aren't in the local distance in the area. In the event, if you're not local, you can class this as an advantage of being deducted as hotel bills, airfares, and part of the cost of your meal as well can be classed as a deductible expense. Office supplies. If you're chosen to operate at your home as a home office, you can manage your rental properties from there. You may also want to deduct specific expenses such as part of the homeowner's insurance, utilities, and home mortgage interest. To qualify for this tax benefits, the space assigned as your home office must serve as your primary place of business where you handle matters regarding your operation of your rental investment property business. In essence, the home office area must be used exclusively for business and not any other purpose. So you can't just have a desk and say that's my home office. It has to be a dedicated space for office purposes. You do not necessarily have to assign an entire room at your home. However, if you can assign a part of that room, it is definable as your home office. Mastering how to handle your taxes. Handling your taxes can help you maximize your profits. After all, as a business owner, that is what you want, isn't it? They can be complicated, but when done correctly, there is financial rewards for this as well. Choose one of our courses where I explain in this course. Our AQA tax rules course has become how to become an expert today. I also offer a 45 minutes consultancy, a discovery call where you can reach out and I can give you all the information you need to make sure that when you're getting into property investment, you're doing it the right way. Feel free also to reach out on all our social media via Twitter, Facebook, Instagram, and YouTube, also LinkedIn. And remember, I offer a free discovery call, and we have loads of courses that will benefit you if you are starting your journey in investing in property. I love to share all your comments, and I'll come back in and answer all your questions you may have. If you feel like you need to just reach out, please feel free to contact me at info@savvywomen.co.uk or visit our website www.savvywomen.co.uk, where you can find lots of free resources and information about our services that we offer and things that you can also do to make your property investment a success. I will see you next week on another finance talk with myself, Sophia.